Welcome to Real Estate 360 Live with Ryan Sloper, the trusted name in real estate radio. Now, here's Ryan Sloper.
Welcome, everyone, to another edition of Real Estate 360 Live podcast. We actually stream this show nationally. You can catch all the other previous shows on Real Estate 360 Live, as well as Louis Camerosano's show website, which is smoggled.com, which is SMAULGLD.com. What we do on this show is we cover everything that has to do with real estate. Now, we're not just going to talk in, the national perspective. We're not going to just break things down where we're going to say it's you should buy a house or not buy a house. Interest rates are great. We're going to talk about, the economics behind things. We're going to talk about government policy and how they affect interest rates, how they affect the overall real estate market. Obviously, we've got a lot going on in the markets right now with the government shutdown, with the Federal Reserve, probably the transfer of power from Federal Chair Bernanke to probably Janet Yellen, and what that means long-term for interest rates, for real estate. Joining me on the call, as he does every week, is Louis Camerosano. Louis is a former school teacher, a former attorney, and a former general manager of a major real estate portal. He's often cited in the media as a real estate industry expert, and he's been cited in the Wall Street Journal, Forbes, CNN Money, Fox Business, and numerous others. Like I said, we're going to digest what's happened in the last 24 hours and talk about where we're headed from here. Louis, how you doing today, buddy?
I'm doing grand, Ryan. How are you?
Can't complain, sir. It's just ironic. I mean, we just talked before we hopped on the show that, it seems like every week it's like, Groundhog Day. We're waking up to the same thing every week. It's not just day to day. You know what I mean? It's now week to week, month to month, and I have a feeling it's going to be year to year at this point. You and I have been talking that, really everybody is expecting like there's going to be some magical solution that just pops out of thin air when really there really aren't many options other than continue to do the same crap that they've been doing for the last 5 years. And nobody really wants to just come out and say that, that this just has to continue, because ultimately it does have to continue. We say that, you're going to kick the proverbial can down the road, and look what we got. Our solution yesterday was another temporary extension. So the government is now going to be funded through January 15th, and the debt limit is going to be good through February the 7th. Well, we know that Congress doesn't really like to work through the holidays anyway, November, December, so that's a shot, right? So what do we really think is going to get accomplished in the next about 90 days, if anything? What are your thoughts, Louis?
Well, I can't say I'm stunned at all at what they've done, because you and I talked, I think, at the beginning of the month, and you had asked me the question, do you think they'll settle this right away? And I said, no, they'll settle it right up until the last minute, but they won't really settle it. They'll just do an extension, and they'll, as you say, kick the can down the road. And you agree with that. And the reason you agree with that is because you know that what they weren't going to do was come up with an agreement to cut spending. You knew they weren't going to default, and that's the biggest farce of this whole charade that they played. Default was never in question. The only way default would have happened is if they willfully, meaning the Congress decided they weren't going to raise the debt ceiling, then it went to the president for prioritization, and he said, you know what, I can't pay it, I'm not going to pay it. That was never, ever going to happen. But you heard in the media, you heard people like Robert Reich, you heard people across the spectrum talking about the threat of default if we don't raise the debt ceiling. And they coupled those two together as if we didn't raise the debt ceiling, we were going to have a default. And that is patently not true, is not true, and we'll hear it again in January and February, and they use that as an excuse to get in the spending they want. Both sides, because neither side wants to give up any type of spending that their constituents rely on that helps them get elected. So even the headlines were hailing Congress raises debt ceiling to avoid default. No, they raised the debt ceiling to continue borrowing money. And what's interesting, what I see on Smoggled, the searches about what this all means to the economy, the U.S. markets, the U.S. dollar, many of the searches come from overseas. And it makes sense because they're looking at it much more objectively, and what they're seeing is a sovereign who is basically telling the world, we can't pay our debt unless we borrow more money. Now, if you're a creditor, if you're in the United States, you're thinking, well, yeah, the United States, we just raised the debt ceiling, we're the United States. But if you're the person lending the money, you don't look at it the same way. You look at it from a much more realistic point of view, not through the lens of any nationalistic chauvinism. You look at it, wait a minute, they're saying two things. We cannot pay unless we borrow more money, and we're going to debate over it right up to the last minute to decide whether we're even going to do that.
Correct.
That can't give you comfort. And we saw the next day, not the next day, the day before they raised the debt ceiling, which was yesterday, so it was 2 days ago, the Chinese came out with an official press release saying, we need to get away from this hypocrisy is what they called it. We need to de-Americanize the financial system. And it's hard to argue, unless you're an American, that they're not right, because if this is how we're going to play the game, basically saying the U.S. is the world's reserve currency, but it could default at any time, that defeats the purpose of having a rock-solid world's reserve currency. And they also know, the rest of the countries, that the U.S. abuses that position to do deficit spending to enrich its citizenry. So we spend money that we don't have on military to go bomb countries that we expect to buy our debt, and then we hand the money out in the form of entitlements in money that we don't have in the form of Social Security, Medicare, food stamps, and the like. And the only reason we're able to do that is it's not because we're the richest country in the world. It's because we're the richest country in the world and we have the world's reserve currency. So basically it's like what you would describe, Ryan, as someone who has a lot of money and then has an open line of credit and has access to that credit and can go out and spend more.
Right.
But the difference is in business, if somebody has a lot of money and has an open line of credit, they got to pay it back. So they have to make a good investment on the money that they go out and borrow and then spend or invest. The United States doesn't. The United States can always just say, okay, we'll pay you back either in inflated dollars or we won't pay you back at all. There's no collateral. It's not like the only reason people invest in the United States treasuries is because they're considered safe and the U.S. is good for it. But I think people are starting to see, I don't mean people, investors and foreign sovereigns are starting to see, wait a minute, we're too exposed to this. And you have seen in the last couple of years the pulling back on Chinese and Japanese sovereigns, pulling back on the amount of treasuries that they buy and that they hold because they know they're too exposed to that. And they're buying other countries' sovereign debt, and they're also buying, especially China, gold. And that, I think, is a trend, and it's going to be very difficult for the United States to protect the dollar unless we cut spending.
Yeah. Well, it was interesting, Louis, because all that you just described there and the perception like that the Chinese have now, and, you know, like yesterday, it was all over the news. Warren Buffett, I guess, was on CNBC, and he likened, you know, the United States is messing around with the debt limit and potentially not paying its debt to playing around with the weapons of mass destruction, right? Which, because I think in the back of their mind now, all these big-time businessmen understand that, okay, you guys are going to keep playing this game, and at some point, it's going to be a catastrophe. They keep bringing up the fact that there should never even really be a debt limit, because let's be honest here, Louis, they're never going to not pay their debt. Okay, if they do, then it's just going to be a complete explosion that takes place, right? So they're going to continue to just push it. Now, what I don't understand is the whole political tactics of this, because we knew the whole time that they were just going to drag this out to the very end, right? So what's going to be the difference between now and the next time when we come to January? There isn't going to be any difference. They're going to argue back and forth and eventually come to the same conclusion right now that basically, you know what, the Republicans want to show that they can strong-arm and they can do all this stuff and have leverage to not fund portions of Obamacare. But at the end of the day, what do? They laid down. They didn't have a choice. And they won't have a choice come January, and they probably won't have a choice for the next couple of years. So Warren Buffett argued, why don't you just pass a law that says that you're never going to actually default on your debt? You're always going to pay your bills. There is no debt limit, because it's a joke. You know what I mean? It's another. But
even that is a joke too. But basically, what you're saying is, we're just going to right. If you're going to go through the charade and just spend the money anyway, why even pretend that you're going to try to stop spending it?
Yeah, I mean, at least there would be more certainty in the market. You know what I mean? If you already know you're going to do it, just say you're going to do it.
But Ryan, isn't that the same exact point that you and I talked about with respect to the Fed, where they pretend they're going to taper. They pretend they're going to taper when they have no intention of doing it because they know they have to keep printing money. The reason they talk taper and the reason the Congress talks about cutting spending is they're trying to send a message out to the markets that we're really not that profligate. We're really not that wasteful. We're really serious about cutting spending and not just printing money out of the Fed, $1 trillion a year. What they're trying to do is maintain the confidence that this spending isn't out of control from the congressional point of view, and that QE and the printing of trillions of dollars a year is not a permanent feature of the economy. However, you can only keep saying, we're going to cut spending, well, we'll raise the debt ceiling this one time, and then raise it again, this one time, and you can only say, taper, we're going to taper and pull that bluff until you finally do lose credibility. So they are in a rock and a hard place, right? And they can only both choices are not acceptable, because if they just admit they're going to print and spend, well, then confidence gets lost in the dollar.
Right.
But if they do just print and spend, or if they do cut it, then the economy collapses.
Yeah, well, you had argued weeks ago that it's kind of like, okay, so we're doing stuff that's basically not promoting business. You know what I mean? We're all these things that are going on here. You're better off for the government to take and spend money on infrastructure and those type things to drive more jobs, to create more revenue. There was actually a congressman.
I don't advocate that, but if they're going to blow money, I'd rather they do that or hand it out to the people.
Well, exactly. You might as well do
let them spend it.
That's somewhat productive versus just giving it to the banks to do nothing with it and invest and make more money. But there's some congressmen last night that basically said, obviously you need to simplify the tax code. Basically, you need to allow businesses to have certainty so they'll start to invest and create more jobs, and then take that and don't tax more, but take the additional revenue and start to pay down the debt. I mean, these are common sense type of things that, what? Why would it be so hard for people to jump on board? Not to mention you have to do that in addition to cutting spending, which we know that's not going to take place. So you might as well promote businesses to create more jobs. Now, I don't know if you saw this, Louis, but I found this article, and I don't know if it's through social media or whatever, but J.P. Morgan Chase just came out and basically said that they're indicating that they will no longer be allowing international wire transfers for cash deposits withdrawals in excess of a $50,000 monthly cap, which is amazing. If this is accurate, Mike Adams of National News received a letter, and he contacted Chase Bank and was able to confirm these new policies. According to Chase, everything is fine and customers need not to worry. Their response was that these changes were being implemented to better serve our customers. Did not explain how blocking all international wire transfers would better serve their customers, however. And they didn't specifically deny any knowledge of problems with cash on hand or government debt or any such issue. They basically downplayed the entire issue and had no answers for why capital controls were suddenly being put into place. Now, this is the beginning of start of even more of a mess. Okay, J.P. Morgan Chase, along with some other large banking conglomerates, are some of the primary shareholders and owners of the Federal Reserve. Okay, so there's some bigger issues taking place here, and with the threat of obviously government shutdown, debt limit, all these things, and mysteriously now this comes into play. I find it all too interesting because I think what they're very fearful is that people are going to start shifting their money overseas because of all the uncertainty and crap that's taking place here. Would you not agree with that?
Absolutely. I mean, because if it isn't apparent to a U.S. citizen what's going on and what the United States finances look like, it is clearly apparent to foreigners. Now, if you are an American citizen, and even though you're constantly bombarded with all is well and the stock market's going up and we have a real estate recovery and the Fed's doing a masterful job and, Congress, they're a little screwed up, but they eventually get their act together. We're on the right path. Now, at some point, some people start to look at that and say, no, that's not really true. Maybe I should diversify my assets and maybe I should send some money overseas. I don't know if that's what they're getting at. I mean, I haven't really studied what J.P. Morgan Chase did. I think it was just they sent out those letters in the last day or two. But that is one of the impacts, is they do not want money to leave the country, because if it does, as we saw, like that creates a capital flight and it drives the economy down if people send their money overseas. Now, the better way to handle preventing people from sending money overseas isn't to outright stop them. It's to create better business environment at home so there's no need to send your money overseas. It's to create a stable dollar so you feel confident in it, so you don't feel like you have to send it overseas for it to be safe. Because that's what Argentina does. Argentina prevents putting capital controls, and basically they also restricted access to people's bank accounts, how much money they can take out, and the economy collapsed. It doesn't prevent the collapse. It just tries to retain control over the collapse. And the only people that did well in the Argentine fiasco were those people that had an alternative currency, gold and silver or U.S. dollars, and already either had them out of the country or had them on their possession. Because if they had their money in the Argentine bank, they couldn't send it out of the country anymore. It's too late. And they weren't allowed to get at it. And then when they were allowed to get at it, there was hyperinflation on it, so they were wiped out.
Well, now, just think about the timing of it, Louis, though. I mean, they did this. They sent out these letters right before, we obviously came to this temporary solution, so-called temporary solution.
Right.
So that in case that the government did default, right, they wouldn't allow for businesses to basically flood all their capital out all at once.
Well, I think, that probably would have got the attention of the man in the street, a U.S. default, because even though it was unlikely and it would have taken an affirmative act of the president to actually go through with it, the president himself was talking about the potential of a default. And if that had happened, because they had talked so much about how devastating a default would be, and I don't think anybody disagrees with that. I think where we all disagree is were we ever on the verge of default and should it have ever been considered. But if there is a default by the U.S. in payment of interest, then basically there's no reason why the world would not, the financial world would not immediately put into place kind of what China was talking about, alternative systems, because one of the main characteristics of a reserve currency is it's good for it. And if it decides it can't pay its bills, then there's no point in it being the world's reserve currency.
Right.
So that's what they were concerned about. If it did happen, then of course the man in the street who even had 2 nickels would be starting to think, well, how do I make sure that I don't lose these 2 nickels? Because, the dollar can't be as sound as it once was.
Well, and after reading numerous things, other articles, not to do with these banks and their capital, but in a recent USDA letter, the U.S. Department of Agriculture letter to state food stamp directors, in which they noted that the lack of funding would lead to a complete freeze on supplemental nutrition assistance program, also known as food stamps, to millions of people. So within 24 hours of that, of not, having a default or whatever, such a move from coast to coast, there would be probably rioting, looting, and violence when people wouldn't get their food stamps. How many people are on food stamps, Louis?
I think it's 48, 50 million people, right?
Yeah, it's like 50
Now,
million.
not all of those are in situations where they're in dire circumstances. It's supplemental for them. But there are some, and there's probably millions of people that are on food stamps that is exactly how they get fed.
Exactly.
And there's a moral argument. If you are hungry and you can't do anything to get food, that's the whole what's the one with the one in France where the guy, he's hungry and he commits crime for food. There's a lot of sympathy for that. If someone's starving, you had food riots in Egypt over the rising prices of food. If people that are legitimately on food stamps and need that, you can expect them to riot.
Absolutely. And this is just more to the reason why we are not ever going to default. It's not going to happen.
Well, let's define default, though, Ryan, because what they tried to define default was not continuing every last bit of spending that the government does. If we don't continue that, that's a default. That's how they try to frame it. But really a default is only not paying the interest on the debt,
yes,
and perhaps not paying legitimate creditors. So, for example, Medicaid providers,
yep,
if you don't pay them, then you have breached your contract and you have defaulted on those obligations.
Right.
And not paying for Social Security, not paying benefits or food stamps, that's not really a default. That's just a failure to come good on a politician's promise, because
Absolutely.
you don't contract for food stamps.
Right.
You get them at the behest or at the pleasure of the government. They can cut them off at any time. Now, Social Security shouldn't be that way if you think about it, because they told us you're putting that money in, that's in your account, and you'll get that back. Yeah. But now they're telling us, no, we'll means test it. Maybe you won't get it. There's no money in there. Yeah, the whole thing would be a disaster if those things couldn't be paid. But again, if you look at the budget, Ryan, I think I broke this down on a blog post. Yeah, I did, in the three potential outcomes. The first one was basically paying the debt when you prioritize where your tax revenues go. The second one was on the mandatory spending. It included Social Security, Medicare. And then the discretionary spending, which is the largest part, includes all the executive offices, the Department of Defense, the Department of Agriculture, the Department of Education. All of those, Environmental Protection Agency, there's plenty of money to be cut there.
Go figure that the largest part is discretionary, you know what I mean?
Sure, but they don't want to cut that because that's where they get their votes, and, they're not going to start. So basically no one wants to cut anything.
So, we don't often talk politics on this show, but I'm just curious as to what your thoughts are. The way the Republicans played this out, and, do you think that it actually is going to start to make sense for them to figure out something more quickly heading into January? Because I'm starting to think, just long term, as far as like the Republican image that's now being portrayed out there, and now that they were essentially forced to lay down. They never really had a leg to stand on to begin with, but now that we're headed down this path, if they stall things out again, if we have another temporary shutdown of the government, are they potentially setting themselves up for, disaster come the next election? I think long term, that it's in everybody's best interest to come up with something. Some sort of plan before this 90 days is elapsed. And I know that it sounds crazy, but I'm actually watching the real estate market and how fragile it's been over the last 30 plus 60 days. I'm hoping that there is at least that these jokers just come out and come up with a quicker solution, even though we know it's not really a solution. It will be called a solution, but at least to give some sort of stability so that people know to make decisions a little bit easier. I'm seeing real estate become, very interesting times right now, not to mention the whole lending process, but real estate itself, because people with no confidence in the government, no confidence in the market, it's very difficult for any person to make a decision to buy or sell a house, to refinance a house. Now, granted, if you're an investor right now, and there's all this fear out there, then you buy on fear. That's typically what happens. You're able to get better prices, discounted prices, and things like that. But do you think at any point in time that there's ever going to be any sort of approach that's actually going to be meaningful, or are the Republicans really just going to screw themselves and continue to push things and get nothing done? Because ultimately, I don't think they can.
Here's the problem the Republicans have. The Republicans, some of them, actually believe that there is a potential financial crisis looming because of the out-of-control spending that the United States does. But I relate them, they're like the people that might have been complaining pre-9/11 that we need to have better security, we need to lock the cockpit doors so that terrorists can't get in, and spend all their time for years complaining about the potential for a terrorist to do that. Now, if you complain for years about that happening and it never happens, it makes your argument very weak. It makes you look like, okay, look, other countries don't do it, just like in our case. Other countries like Japan have debt to GDP higher than us. We're the United States. So it's very difficult to make the argument that they're making that the finances of the United States are in, it's like the sky is falling, are in a precarious position. We're going to have hyperinflation. All these things haven't happened yet. So It's very difficult for them to stand on principle and say, but it's going to happen. And then, people roll their eyes and say, okay, sure it is. So they have a very difficult position to try to stand that ground. So they don't. And then they want to also make sure that some of their constituents who believe that we need to cut spending, that they're fighting for them. But then what they have to do politically is come up with a reason why they caved. And they really can't. So you're right. It makes it very difficult. And I'm neither Republican or Democrat, so I can look at this objectively. It makes it difficult for them to hold their ground, because if they hold their ground, the net result is going to be we cut spending and we immediately put the economy into a tailspin. Right. Now, that may be the right thing to do, like Volcker did in 1982, raising interest rates, breaking the back of inflation, and eventually, 2-3 years later, the economy was soaring, and Reagan got reelected in 1984 on the back of a good economy. But congressmen and senators up for reelection, they'll get voted out of office if they were to actually hold firm on the debt ceiling. Let's think of what would happen. Let's say they held firm on the debt ceiling, and the debt ceiling was not raised. Then Obama had to go line by line, make sure he paid the creditors, and then had to make decisions on where to cut. That would still all be blamed on the Republicans.
Absolutely.
Because he'd have to cut it, but he'd have done the right thing and paid the debt, and he would have done the right thing and paid the veterans and the Social Security payments, but he would have slashed stuff, and he would have said this is all unnecessary because the Republicans, for the first time in 100 years, never raised the debt ceiling, and look where we are now. All the 800,000 people that work for the federal government, more than that, would be put out into the street. The economy would basically collapse. Now, maybe in 2 or 3 years it would get better, absent intervention, which they probably would intervene anyway and draw it out into even longer economic collapse. So that's not really a viable option for the Republicans, because they even know that even if they did what they think is the right thing, would end up coming back to bite them, and they get booted out of office. And if we had the collapse, Democrats would get even more powerful, because then they would have all the solutions. Here's what we're going to do now. We're going to spend more money to fix the economy.
Right.
Now that we got rid of these Tea Party and we proved that it doesn't work, look at the collapse around us. The Fed's going to spend 3 times as much. We're going to raise taxes. We're going to do government work programs. And you would usher in an even bigger Democratic majority.
Yeah, well, the whole argument last night was, look, they stood their ground as longer. They put up a great fight. At the end of the day, they had to lay down. And now they've already...
So why put up the fight?
Why, exactly. Why put up the fight when it was imminent that you were going to lose, okay? You should have just... To me, politically, it would have been smarter to say, you know what, we're in a no-win situation. We don't have a choice but to extend this debt limit. We're going to have to work things out over the coming months and just get it done. I mean, nobody needed to stop working to figure that out. But in the meantime, they've already started spinning this whole scenario where now, where they wanted to defund portions of Obamacare, but now they're spinning it as, well, guess what? Obamacare is going to fall flat on its face now, right?
Well, they could have, politically it would have been smarter just to focus on Obamacare,
Absolutely.
give up on everything else, and while they're focused on Obamacare, they would have scored political points by showing pictures of the website not working, people complaining, doing studies on how much expensive it is while it's not an affordable health care. That would have been, if someone was, they're not advised. I think, right. I don't know how these things work, Karl Rove, who does the advising, but I don't think they're properly advised, and I also think they're not unified in the advice that they get.
Right. Well, it was interesting to me because, you're exactly right. If they could have turned the focus off of what they were focusing on and made it more about, look, the system's already failing. You know what I mean?
We don't have the money, and now we have to do Obamacare. We're being fiscally, they didn't have to make all the other arguments. They could just say we're being fiscally sound here. Obamacare doesn't work. Let's try something else. Let's put a moratorium. If they just stuck on that, that was the popular, the polls show that there's a majority of people that don't like Obamacare, and probably during this time, more people would have been made aware of perhaps why they may not be in favor of it, because there had been more media attention on the failures of the rollout. Yeah. But instead, all the attention went on the negativity towards what the Republicans were doing.
Yeah, I agree with you there, and it was we
should be political analysts, right?
I'm middle of the road. I don't take sides really either, and that's why I was asking for your opinion.
Yeah, and I'm not a Republican or a Democrat.
And I was just trying to figure out, why they would do it that way. To me, they're just going to screw themselves over, because now it looks like they held things up. People couldn't work for all this time, and if it happens again, they'll be the ones that are blamed for holding it up again. You know what I mean? They're not getting anywhere, and obviously I've heard some of the Republicans and even some of the Democrats saying that they form these alliances like groups of 8, and unfortunately, groups of 8 are not going to do anything. You know what I mean? The last time I checked, it seems to be a lot larger group than 8.
But ironically, the Republicans that were considered the most sensible, they're going to be the ones that are going to be the most vulnerable. Because Democrats are never going to say, oh, he's one of the good ones. He went along. No, they're going to paint them all with the same brush. So you're better off being a Tea Party Republican who held your ground, because your base will at least support you.
Yep.
And I think that the ones that they're criticizing have built their political capital by, who's opposed to them. So you have, what's his name? Mike Lee. What's the Cruz guy's first name?
Ted.
Ted Cruz, and Rand Paul, they stood firm against, raising the debt ceiling. They voted against it. Now, no Democrats aren't going to vote for them anyway, and Republicans aren't going to shy away from them if they actually become the nominees in 2016. Where there's going to be a problem is with the middle-of-the-road Republicans, because Democrats aren't going to vote for them anyway, and then the Tea Party is still going to give those guys a lot of trouble.
Yeah. Well, in the very beginning of all this, Louis, they could have just said, look, we're basically fighting a losing fight, and that we believe that Obamacare, look at what we have right now. Look at the system. Look how it's failing. And stuck to their guns on that, like you said, and I think they would have been in a much better position.
Well, they're in a position, Ryan, where they control spending, and they could just not fund Obamacare. That would not have been a difficult thing to do. I mean, they were confronted with the argument. It was passed by Congress. Obama got reelected. Supreme Court ruled on it. Law of the land. That doesn't mean that Congress has to fund it, though.
Right. And
they would have been perfectly within their rights under the Constitution to just not fund it. And, that could have been the big thing. And if they had framed it that way, and a bill that raised the debt ceiling, that did everything, but only defunded Obamacare, if Obama didn't sign that, then it would have been all about him and Obamacare.
Right.
And they're stupid not to have played it that way.
Yeah.
Because he said, I will veto any bill that comes to me that defunds it. Well, basically, at that point, he might have been defying the will of the people if 50, 60% of the people don't want it.
Right. Yeah. I mean, because this turned into more of this whole thing is basically like, I'm out of work. That's what it turned into. I'm just out of work. I want to go back to work, right?
And it's the Republicans' fault. In fact, there's protests going on today. I guess they were planned in advance of government workers that want to go back to work.
Yes, and does the average Joe care about the debt ceiling and all this? The only thing they care about is, are they going to get their monthly paycheck, right?
Absolutely. Why should they care? You and I like to talk about economics and the macro level.
Right.
But the average person, and so do we need to get paid.
Right.
We need to go to work, and that takes priority over these theoretical, they're not theoretical, but these discussions when all you really want is a result. And if you're out of work and you can point to somebody whose fault it is, you don't need to understand the issue much more.
Yeah, and it's going to be interesting. So, with all that we've got here, so now we're moving, basically our next deadline's January 15th. So what does this mean for real estate in the next 2 to 3 months? Like, obviously we've gotten a temporary boost for interest rates today, so they're going to probably go down by 1/8 or 1/4 in interest rate today as of right now. So that's going to be another boost if interest rates slide back down. Obviously, people going back to work, they're going to be somewhat happy again, right? So I would imagine the consumer confidence is going to go up a little bit, maybe not fully because they know that there's another deadline looming, but for the short term, where we have the holidays with Thanksgiving and Christmas. I mean, can you imagine people not getting paid through the holidays? What that would have done?
Oh, they couldn't have had that happen, right?
They couldn't have had that. So now they'll be at least cheerful through the holidays, and then boom comes January. So the question is, as far as real estate is concerned, I myself think interest rates are going to actually go down a little bit temporarily through the holiday season, keep everybody happy. It might move the real estate market a little bit, but historically, November, December, January are not big real estate months. However, I have lately seen, Louis, a lot of properties coming on the market, and an influx of properties which is kind of abnormal. But I think a lot of that has to do with people just saying, "Hey, I need to go ahead and get out and cash out."
Well, they see the storm clouds on the horizon that a lot of people who wanted to sell have been waiting for higher prices, and maybe now they're thinking, maybe we've kind of peaked, and I want to miss my chance here.
Or I'm scared I might potentially lose my job. I need to go ahead and.
Well, yeah, sure, that too. Of course.
I think
basically whatever recovery we were having, whatever optimism that might have been imbued into the population is probably now been taken back a peg.
Yep.
Because of this, and it's natural in the real estate for it to slow down anyway, and that gets extenuated when you have these types of circumstances where people are worried about the United States paying its debt. It's a big distraction.
Absolutely. So
you can't think well of the economy while the main story that's blaring in your face is catastrophic default looming.
Right. Yeah,
it's just not conducive to positive consumer confidence.
So as we both had mentioned last week, basically, okay, so we said, we've been moving through these months with different distractions and things. So we went through Syria, we went through the Fed taper that never was going to happen. Now we went through the government shutdown. Now we have a temporary solution, which gets to January.
Right.
I mean, so now we've gotten through another 4 or 5 months. So, how long then we have Janet Yellen potentially coming into our office for the Fed, which is she wants to potentially go negative interest rates, right? So, I mean, we've got these different things that are happening. I mean, but realistically, for people that are worried about real estate, I actually think, now barring a catastrophe as far as the shutdown issues, if all that just probably will get extended again somehow, I don't think much is going to come of that. But if that happens and then we have Yellen come in with those interest rates, I can actually see interest rates maybe dipping down a little bit more. I think that there could be another form of quantitative easing, maybe called something else, basically some sort of housing relief, right?
Right.
Which then spikes the real estate market a little bit going into the spring again. Everybody's got that great consumer sentiment again because they feel good. Their house is going up again. Interest rates are low. Time to buy. I can see this scenario playing out all over again. Okay? I think see coming.
Ryan, you're right, but I think if you look back at the massive housing boom that we had in 2000s up to about 2006, that was all on the back of Greenspan's lower rates.
Right.
Then if you look at the recovery in real estate in the last year or two, that was on the back of the no interest rates of Bernanke plus $4 trillion in QE.
Right.
Now that we've kind of had a bit of a trough or kind of a leveling out of the housing recovery in terms of where housing prices are going, in order to get that type of boost again, you're right. If Yellen comes in and then doubles down on QE, but calls it not QE, but calls it something about trying to help the labor market because she thinks she wants to help that, you might get a small increase. But you notice there's a diminishing return on what you get, and you have to spend even more money. And the problem with, if she doubles down on QE, first of all, what's she going to buy? Because the deficit's going down. There's probably not $150 billion worth of U.S. Treasury she can buy. She has to probably invest in the stock market. Who knows what she's going to do?
Oh no, they could buy 100% of mortgage-backed securities.
They could. You're right. But my point is, at some point, if the more the Fed buys and the more the government spends, the confidence in the U.S. economy starts to become, or especially for the foreign investors, becomes even more apparent that basically they're printing and spending their money trying to get out of this recession that they're not really being very successful in, and all they're going to get is a 5% rise in the price of houses over the year. That's not very very
Yeah, but you know what? I don't even think that.
But it could happen in a year. But Ryan, you're right. You could next year that could happen. It doesn't mean that it's not a disaster long term, but next year it might be a better year for housing if they throw all their guns at it again. Right.
Well, the average Joe, let's say the average worker that works for the government that's making $80,000 a year, maybe it's both. It's
a nice average Joe for $80,000, isn't
it? Let's say in the DC metro area, right? That both husband and wife are both making similar incomes, both work for the government. Now they're back to work.
They make $100,000.
Okay, so now they make over that. So the things that make them have confidence are low interest rates and that they're getting a pay.
Oh, absolutely.
Right?
No, they don't know that the way they're getting them is going to cause a problem. Right. That's the reality to them.
And that's why I feel like, as long as those things are happening, as long as we have a low interest rate environment and stable paychecks, that the real estate market can continue to move gradually. Like you said, there is going to be diminishing returns at some point. But we've been seeing that obviously it's been diminishing returns from what they've been doing for the last 5 years, right? Everybody was thinking.
But there's still returns. They're still positive in what they've done.
They're moving in the right direction, exactly. The minute that they start to turn negative is when we have a problem. When we have a low interest rate environment and everything's are going negative, then that's a big problem.
But question whether they can actually keep a cap on these interest rates.
Right, and then the taper talk will start all over again. You know what I mean? But at this point in time, where we're at right now, and we've basically we've now stalled out the economy for a backlog at basically at least 30 days. I mean, now imagine USDA is going to come back to work, and the IRS is going to come back to work. So now they're going to be able to get transcripts. How far are they going to be behind? It's going to take them a month, two months to catch up.
From a short-term trade point of view, you could be 100% correct.
Yeah, so by the time we get to, the actual statistics, which are probably made up anyway for the beginning of next year for the last quarter of this year, what is it really going to tell us? And that's what the Fed is looking at. They're looking at those numbers. They're looking at the initial claims this morning was 358,000, initial jobless claims, that is, 358,000 versus the estimated 335,000. Approximately 70,000 was due to the government shutdown. But, I mean, these are the numbers they're looking at, and they'll be able to always blame something when they don't want to look at the data for what it is. So they can blame that this was the government shutdown, and that's why
right.
I think that's what, guys, we definitely can't paper for the foreseeable future now. There was a delay, a stall in the economy. We got to get it moving again. And Yellen then comes in and says, you know what, we got to do something with these interest rates. Let's go.
And we got to fix the labor market, too. That's the one place where we haven't been successful yet. We've been successful everywhere else with QE, but now we got to train our sights on the labor market.
Absolutely. And that's when you said they'll come up with some creative name of a program.
Well, she will.
She will. That will fall on its face inevitably, probably. But it'll make it seem like they're doing something once again, which is all people care about because they look at things for face value. Oh, look what they're doing. You know what I mean?
Absolutely. You got to always be caught doing something.
Right. You got HARP, you got HANT, you got HAFA, you got all these programs, quantitative easing 1, 2, 3. I mean, we've got so much stuff to pay attention to here. I mean, and see, these are the things that you and I are discussing on this show. And, you know, for some people, they may say, well, why do you discuss that stuff? It's important to understand the bigger picture here. The bigger picture is that long-term, all this stuff is very destructive, not just to the overall economy, but to real estate, to mortgage interest rates. I would rather have a stable market that's consistently in the 6% mortgage interest rate, 6 to 7% interest rate, have a lot of jobs in the economy than have a struggling job labor force and have low interest rates.
Right.
You know what I mean? It just doesn't.
And these booms and busts, too.
Absolutely.
It's not good for the real estate professional if they can't plan over the next 5 years some type of normalized income. What they have to do is they have to scramble, make money during the year or two that it's up, knowing that it's going to go back down. You can't really plan your career or your life, and it makes it difficult to be a real estate agent.
Well, not to mention, Louis. Okay, so I do real estate myself, right? I also invest in real estate, so I know what's going on in the real estate market. I would say I have my finger on the pulse of most of the time what's going on. So if you're a real estate agent, you're almost having to predict and figure out where things are going. Are we going to have another buck cycle? Because there's going to be another buck cycle and people are going upside down, but I need to get back into short sales, right? Or are we going to have more foreclosures because now I need to focus on getting some REO stuff? Or
you have to change your skill set.
Absolutely. You're constantly having to adapt to the market because we don't have normal markets.
It's okay to adapt to the market because people who don't adapt to the market go out of business. But if you're adapting to a market that's artificially manipulated, that's not right.
Absolutely. That's my biggest hang-up is that, you know, I'm giving people information based upon what is being put out there by the Fed and the government because really normal market, I wouldn't care much about that. You know what I mean? I really wouldn't. You could look at if the numbers were accurate coming from the Bureau of Labor Statistics, and I could go out on the street and ask my neighbors and everybody else, hey, you know, how's the job coming and all that, and I'm giving positive feedback there. Then, like I said, that's a common sense approach that basically I can probably pick up 20 people on the street asking a question. I can tell you how the economy's doing. But these numbers that they throw at us and all these government programs that are out there, it's a joke. It's artificial manipulation of these markets. And you know, 10 years ago, it wasn't like that. I could probably come into work. I could look and see, okay, this is what we got coming out today. Stock market's going to go up. Mortgage interest rates are going to go down. Now I actually have to think about it and say, okay, well, what are they going to read into this? What is Wall Street going to read into the Fed when they open their mouth today, right? They're not going to just take it for face value. They're going to think if there's something behind the curtain that they're hiding. And every play on Wall Street lately has been, I mean, the stock market is absurd amounts right now. Over 15,000 is crazy. It's not, I can tell you right now, it's not the middle class's money. It's definitely not their money. So I'm curious, where do you, like, as far as the stock market, I mean, obviously it seems like there's a bubble going on there. The rich are getting richer, the poor are getting poorer, and the longer that we continue this, you know, artificial manipulation, that's probably going to be the common theme. I mean, I've read a lot of marketing books lately, and it's kind of like, hey, you need to stop selling as much to the middle class, and the middle class is going to the basically lower middle, and you need to go to the rich because they're really the only ones that have ordinary incomes to give you money.
But what's ironic is, you know, we were talking about Democrats and Republicans earlier. Democrats seem to favor all this government intervention, but really, and the Fed, the unintended consequence of all this is really to harm their constituents. because the Democrats supposedly, traditionally, are the champion of the middle class and the poor. But these policies harm the poor and the middle class far more than just a free market would do. But it looks like they're trying to help, and they get points for that, because if the Republicans are just viewed as helping the rich, that's really, if you really look at who the donors are to the Democratic Party, there's more rich people and banks supporting the Democratic Party because they like when the Fed sells more treasuries, because they get to act as the primary dealer. They get to place all the debt. That's where the banks make their money. And when you have asset inflation, they get to do the IPOs, the banks. You wouldn't get that in a normal free market.
Yeah, not to mention the cheap interest rate policies that have occurred through all this. You know what
Correct.
I mean?
So that is really the government intervention is a Democratic. A true Republican would be against government intervention in the economy, would be in favor of free markets, although most of the Republicans don't believe that. But the Democrats are in favor of the Keynesian, centrally planned economy where the government is not a referee, but is also an actor and a participant in the market. And when they do that, they pick winners and losers, and you have to admit that what happened in Detroit wasn't because of the free market.
Right.
And so it doesn't help. It purports to help the poor and the middle class, but in the end, the unintended consequences of these government programs is it reallocates money from the middle class to the wealthy.
Yes. Yep. And that's, something that most people don't see or don't care to see. And ultimately that's a long-term, thing where they may not, think it's affecting them right this second, but it will. It will. And we've said it so many times. I mean, do we see pay increases going on right now? Heck no.
Nope. No, but the reason for that is they blame the Republicans in Bush, which wasn't a free market administration, for what's happening now. And it's the same with, Roosevelt, who was a Democrat, got praised for getting us through the Great Depression. And there's a myth that somehow Hoover was some type of free market Republican when he was a real, also centrally planned type politician. Roosevelt's intervention arguably caused the extension of the Great Depression and the need for World War II.
Right.
So it's kind of a myth that somehow free markets lead to this disaster when it's probably the officious intermeddling of government and stimulus and central banking.
Okay, so funny question for you then. What are the odds of us ever having a free market again?
Oh, the only way you'll have a free market is if you have a collapse of the current system and the central planners don't have control of rebuilding it.
Well, that's what that's why I figured you were going to answer that way. That seems impossible to me. Well,
they've put in place many safeguards to make sure the game runs in their favor, because most people were in favor. There's a need for a banking system. In 2008, that the intervention, I think Bush's famous comment was, I used the anti-free market principles to save the free market. Now, a lot of people believe that nonsense.
Right.
That somehow we need of course you need a banking system, but you need a banking system run by the same people in the same banks. And would you be better off not having a banking system for a month or two while others scramble to, fill the void? Because those banks were and are wards of the state, and so basically they can, privatize the profits and socialize the losses. And they always know that big government's behind them if there's a problem. So they support them. And then, of course, paying the fines makes the people feel better. But all that does is that's just money that goes back to the government so that the regulators can get bigger and put more fines on them, which the banks are happy to pay because other banks can't compete with them because they can't even think of hiring lawyers to even prevent them getting the fines. So you create a situation where you've got a too-big-to-fail banking system where you'd be better off having thousands of small banks.
Right.
It's like anything else, right? In a system, if there's only one point of failure, that's not good. You want to have 1,000 points of failure because it's less likely to happen.
Yeah, and I mean, if we figure...
And that's what you'd get in a free market.
Yeah, and I mean, I would love to see that. I'm feeling I might not ever see it. I might never see that day. But at this point in time, we have, basically quantitative easing, which is about $85 billion a month. I can honestly see that before we will never completely get rid of or taper off from that amount between now and between the end of Obama's office, right?
Well, if it's not QE, because as we run our deficits up, and let's say it gets to the point where interest rates rise and we can't pay the debt, then because the debt service is too expensive because interest rates are so high, well, the Fed will have to print up the money.
Right. Yep.
So it never ends.
It is never ending. It's it's like this just vicious cycle. Every time we think we get just closer and closer to the edge of that cliff, it just extends itself by another couple feet. You know what I mean?
Well, that's because they have the ability, because they control the entire game, and they control the printing press. They control everything. They can just extend the road. They can build more road.
They have the best credit card known to man, the one that we don't have access to.
Right. Now, the only problem is that the Chinese and the Chinese are the most problematic, not the Japanese right now, but the Chinese have control of the production of the goods of the world. They produce more than the United States. We buy their stuff, and the myth is that somehow aren't the Chinese lucky that they have the United States to buy their stuff? Now, as a percentage of population, we're not. We're what, 7% of the world, 10% of the world's population? Mm-hmm. China can sell that stuff to themselves, to India, to Europe, to a lot of places other than the United States. The only reason China did it initially was they needed dollars too, because they wanted to play on the world stage, and their world reserve currency was dollars, and they needed dollars to buy oil and to do international trade. But now that they're a big boy, so to speak, on their own, people are going to accept the Chinese RMB. Why not? Right. Or if they're building their gold reserves, they can use that. So the problem is that people seem to think once a world reserve currency, always. That's not true. Before World War II, it was Britain. And you go back, nothing lasts forever. And what what drives these things down is, it's just like in the Lord of the Rings, the power becomes overwhelming, and you think, if it's easy to print $1 when no one's looking, I'll print 2. Next thing you know, you're printing trillions of dollars.
Yeah, what I tell you, no fiat
and you get
currency,
away with it.
Yeah, no fiat currency has never not become extinct at some point.
Correct. So, because inevitably they abuse it. And at some point the world realizes, just like the U.S. was abusing the Bretton Woods Agreement with the gold, we were spending money, and it became very apparent to the rest of the world we didn't have enough gold if people really wanted to redeem it. So France and Switzerland and the other countries started to come to the United States and say, okay, under Bretton Woods, here's $100 million, give me my gold. We gave it to them, and Nixon realized if that continued for another few months, we'd be out of gold. So he just took just unilaterally said, from now on, no more gold for you guys. Bretton Woods is extinct, and we're going to go on a dollar reserve currency just because we say so. And then they brought in the petrodollar arrangement and made sure that people had to use dollars. Now, that's gone on for another 40 years, since 1971. But for how long are people going to say there's some magic in having to use $1 to buy a barrel of oil?
At least for 2 or 3 more years.
Yeah. Unless the United States isn't making any moves to calm their investors, to give them confidence. They wouldn't have these budget wranglings. They wouldn't just print money because the economy isn't doing well. They'd be more concerned about maintaining the integrity of the dollar. Now, what's interesting, Ryan, though, even though they've done all these things, the dollar has been very strong the last few years, in spite of the dysfunctional fiscal and monetary policies.
Right.
But today it went down. I mean, today there's a 1% drop in the dollar. That's kind of strange.
Yeah,
that doesn't normally happen. But it's still over 80 in the U.S. dollar index. It's just below 80.
Yeah. Well, Louis, we're coming up on the end of the show. I don't want to cut you off, but looks like it's going to cut off on the next 30 seconds. But great show today. I want to have you give out your website so people can check out your blog real fast.
Sure. Smallville.com.
Perfect.
All you need to know.
I want to thank you for coming on. Guys, if you have any questions for either of us, reach out to us. You can reach out to Louis, like you said, at smallville.com, SMAULGLD.com, and also my website at realestate360live.com. That's realestate360live.com. Have a great day, guys. Talk to you next week.
Thanks.